Friends, thousands of kilometers away from India, a conflict is happening that could affect the whole world. The tension between Iran and Israel is increasing. But the important question is this: if this war continues for around 60 days, how will it affect India? Will petrol price increase? Will LPG gas supply be affected? Will food chain price rise? Let's analyze the realistic impact on India. First important fact, India imports almost 85% of its crude oil from other countries. A large portion of that oil comes from the Middle East. There is a very important sea route called the Strait of Hormuz. Around 20% of the world's oil passes through this narrow route. If war tension increase in this region, oil tankers movement become risky. Even if supply is not completely blocked, global oil prices can increase because of market fear. The first impact we may see is fuel prices. India depends heavily on imported oil, so when global crude oil price increase, petrol and diesel price in India can also rise. If war continue for 60 days, petrol price increasing by 5 to 15 rupees per liter, diesel price increasing by 5 to 12 rupees per liter. Diesel is very important because it powers most of Indian transportation network. When diesel price increase, transportation costs also increase. Another sector affected by global energy market is LPG. India imports LPG from countries such as Saudi Arabia and Qatar. During wartime conditions, shipping risk increase and insurance cost become higher. Because of this, LPG price can also increase. Domestic LPG cylinder may increase around 50 to 150 rupees. Commercial cylinders used by hostel and restaurant may even increase more. Interestingly, early signs are already being reported in some cities. Commercial LPG cylinder deliveries have slowed in certain areas. Hotels and restaurants depending on those cylinders are facing delay. To avoid shortages for household, suppliers are prioritizing domestic LPG cylinder. The waiting period between cylinder booking has also increased from 21 days to 25 days. Another market that reacts strongly during geopolitical tension is gold. During global conflict, investors move their money into safer assets. Gold is considered one of the safest investment during uncertain times. If the war continues for a long period, gold price in India may increase by 3,000 to 8,000 per 10 grams. Financial markets usually react quickly to geopolitical conflict. Indian major stock indices include the Nifty 50 and BSE Sensex. When uncertainty increase, investors sometimes sell stocks and move their money to safer investment. Because of this, the stock market may fall by around 3 to 8% in the short term. However, market usually stabilize after some time. Another indirect effect of higher fuel prices food inflation. When diesel price increase, the cost of transportation goods also increase. Since most of the goods in India are transported by trucks, supply chains are affected. Over time, this can increase the price of vegetable and groceries. Vegetables may increase by around 5 to 15%. Groceries may increase by around 3 to 10%. This effect usually appears after a few weeks. So, if the Iran-Israel conflict continues for around 60 days, India may not be directly involved in the war, but the economic effect can still reach everyday life. Fuel price, LPG cost, gold price, food inflation, and stock market could be affected. Because in today's interconnected world, a conflict in one region can influence economies thousands of kilometers away.